Welcome to this week's Q&A. We've got a question from a viewer in the US in San Francisco this week, and it's in relation to banks changing interest rates whilst customers are either waiting to purchase a property or have already signed a contract and waiting for that loan to settle when the property settles. So the question was, look, I have bought this property and I was contemplating a variable rate and a fixed rate loan in my mind, and I was given 2 quotes from the bank, and since that time, prior to settlement, the rate on the fixed rate loan has changed, but the RBA has not actually increased the official cash rate at the last meeting. So why is that so? Why has this happened to my loan? Now, it's a great question, and quite often, we find that people just don't realise how these things happen in the background. So fixed rate loans generally are priced off, if you like, bond markets, credit spreads. So banks can often increase their fixed rate loans when their variable rate loans remain constant because the RBA hasn't moved the official cash rate, and most banks generally follow suit in terms of how they adjust their variable rates. But for their fixed interest rate loans, and we've seen this particularly during, say, June-July period of this year, that banks have quite often raised fixed interest rates twice in a month. So they're responding to what's happening in the bond markets. The bond markets have been extremely volatile over the last 3 months, so moving up and down all the time, and banks have simply sought to safeguard their position and move rates up in line with that. And on the flip side of that coin, however, we haven't seen them come down or adjust down in the same manner. So given where we are in this current rate hike cycle, most of our clients, generally speaking, are opting for variable interest rates anyway, because we're certainly closer to the top than anywhere else in the cycle. And at this point in time, probably a more conservative approach is to take a variable rate loan and see what transpires over the course of 2024, as a lot of the bank economists have come out and stated quite publicly that they feel that rates will come down by circa 100 basis points during 2024. Now, when that starts and when that finishes is perhaps a little different from bank to bank, but in my opinion, we will start seeing rates heading down in Australia sometime mid-year next year, 2024, and sometimes the speed of a decline can also catch people off guard, just as we've seen earlier, say last year, over the last 12 months, where the speed of increase has caught just about everyone by surprise. So, the answer to that question is, look, it hasn't happened just to your loan. Your loan hasn't increased. It's a macro decision that the bank has made, and they've lifted their fixed interest rates for, generally speaking at the moment, just about all ranges between 1, 2, 3, 4 and 5 year fixed rate loan terms. So look, if you find this of interest, please subscribe to our YouTube channel and click like. And if you need any information about your own situation, or you're not quite sure what might be going on, don't hesitate to reach out, email us or call us, and we'll have somebody contact you to see if we can't assist you with your own personal set of circumstances. I'm Andrew Unterweger, and I'll see you at next week's Q&A.